Welcome to Crypto Monday NYC, March 2nd, 2020. We've got, as you can see on the monitors behind us, actually, in addition to being Crypto Mondays, tonight is also a DAO Fest NYC. I'm a big believer in community. We run multiple communities. I also run the Chainlink NYC community. But tonight it's about Crypto Mondays and DAO, decentralized autonomous organizations, and I'm super excited to have Wright, who is the founder of OpenLaw and the LAO, and we're going to get to those really quickly. But first, I always start off, real quick, what's your kind of crypto genesis story?
Hey, thanks, Lou. Really appreciate it. So my crypto genesis story started in 2011. Before doing all of the things that I'm doing, I did a lot with open source technology and wikis. I sold a company to the for-profit sister project to Wikipedia called Wikia. So deeply interested in open source tech, deeply interested in how groups of folks can form together online and do productive things. I fell down the Bitcoin rabbit hole in 2011, and I've never really looked back. I was fortunate enough to play a small role helping to launch Ethereum, the second largest blockchain, and have also, over the past couple of years, worked with lots of great communities, including the folks from Chainlink, Sergey and Steve, along with the folks from Gnosis and other folks along those lines. And really, what we're doing today is fulfilling the vision of what Ethereum and blockchain technology ultimately can do, which is improve a financial system that's gone sideways. That's the reason I got into blockchain technology. It's the reason I think lots of folks, either that are watching or here, got into blockchain technology, and I think we have the opportunity to do that.
Let's just to back up this for a sec, because again, the fact that you were there at the beginning of Ethereum, you just want to give a little bit of background to that too, because I think that helps for the context.
Yeah, I mean, for folks that weren't here back in 2011, 2012, and 2013, Bitcoin emerged from this dark pocket of the internet, and it was incredible, right? Just being able to build a payment system or store of value that wasn't really managed by a central bank was incredibly eye-opening, but it had limitations. And I think lots of folks, particularly in 2012 and 2013 and 2014, began to recognize that. And they began to think, hey, Bitcoin is fantastic, but why can't we generalize this in some sort of way? Why can't we build a general purpose system that can not only issue assets like Bitcoin, but any asset? And I thought that concept was completely fascinating. So this idea that we could begin to program money. At the same time, I began to think about not only programming money, but creating a programming system for all rules, so all legal regimes. And that's in part why we started OpenLaw, was to kind of build out this second layer on top of Bitcoin and also Ethereum. And Ethereum was great. We saw Vitalik, who was trying to build a whole bunch of really interesting projects, first on Metacoin, and then he realized that he needed to start his own blockchain in order to do that. And I think the concept of building a generalized version of Bitcoin was super exciting. There was a lot going on in New York. A lot of the folks that were helping to build Ethereum were in and about New York, which I think was pretty interesting. And we saw the birth of, I think, the second largest and also potentially the most important blockchain in Ethereum.
And so, why don't you give us at least a little bit of a kind of your history of the DAOs and how we got from a DAO, and then we'll go into LAOs. But from a DAO perspective, how did we get to where we are today?
So I think from the beginning, one way to think about what Ethereum was trying to do was not just be able to create a payment system, but a system that has any asset. So that can include other assets that maybe, let's say, an interest in a company. That could be a utility token or a commodity in some capacity. And that was conceived from the beginning. So the first time that I saw Ethereum being prototyped or a proof of concept related to Ethereum was Gavcoin, which was Gavin Wood's personal coin, which was the first major use case that I've seen on Ethereum. So the concept was that you could take yourself and begin to tokenize yourself and in some way begin to monetize your services in some capacity. And that's in part why I think folks were interested not just in personal tokens, but also in the ability to create other types of assets. So Vitalik wrote about in the Ethereum white paper decentralized autonomous organizations, building on Dan Larimer's work, who's done a lot in the EOS ecosystem. And I think that that was just a fascinating concept. If we have something that looks like a central bank that's maintaining Bitcoin, why can't we have other forms of autonomous entities that are maintaining other organizations in a much more generalized way? So when we saw the birth of Ethereum, it was not surprising that a couple months later we saw the birth of the first DAO, right? And it was the DAO, which was a misfortunate name in my opinion, just because it confused things. And at that time, I think that there was really a hope that this experiment would maybe raise $500,000 to begin to fund important projects in the Ethereum ecosystem. And it was one of these things that kind of grew wildly out of control and out of the expectations of the initial founding team, the Slotka team. But it was spectacular. It was a spectacular failure.
I got to tell you, I actually know very little about it, so I'd love to, who was the team? When did you meet them? What did you think of it? And when did you know that, oh my God?
For the DAO?
Yeah.
They definitely were floating around some of the Ethereum New York City and Bitcoin NYC meetups, talking about Slockit, which was really an IoT-based device that connected to a blockchain, which was a super interesting concept. And then the DAO was launched with many and some folks from the core Ethereum ecosystem. Some of the folks that helped launch Ethereum actually helped launch the DAO. And it was interesting, right? I remember thinking there, oh, this is really cool. I can't believe we've done this so quickly. And I think that there was that speed with which the Ethereum ecosystem was beginning to experiment with new concepts and new ideas was really what made Ethereum, and continues to make Ethereum, such a special ecosystem. That being said, I don't think anybody expected to be able to raise, I think it was $150 million at the time, or $50 million at the time, which obviously went up in value with the appreciation of Ether. And I think nobody really anticipated the security vulnerabilities and other problems that the DAO had. But to me, it was a spectacular failure. To me, the DAO was really like the Mt. Gox for Ethereum, right? Mt. Gox really showed the way for an exchange business model. It showed the way in which folks can buy, sell, and trade digital assets. And we saw that become professionalized over the past 10 years with the work that folks like Brian Armstrong and Fred have done at Coinbase. And I think in many ways, one of Ethereum's core use cases is capital formation, being able to pull capital like money. Just like the internet's core use case is e-commerce, right? We know that it's easy to buy, sell, and trade things on the internet. We know in the Ethereum ecosystem that it's possible to pool capital and to pool it in ways that are vastly superior to what we have in other domains. And that means that we need to continue to push here. And that's why I think this emergence of DAOs over the past couple of years is really important. But I think much like what we learned with a disaster like Mt. Gox, we needed to professionalize this. We need to take it to the next level. We know what the rules are in many ways, but it doesn't dissuade us from beginning to think about these DAO structures in a way that can be legally compliant.
So I just got back a couple weeks ago from ETH Denver, which was to me a revelation, really the first ETH heavy developer thing that I'd ever been to, and I came away thinking, oh my God, the size and scale of the community is really impressive, and I think nobody's even close to that. But I saw kind of three different DAO entities there. I actually didn't see Aragon so much, but I know Aragon has a whole ecosystem, DAO Stack, which actually, DAO Fest, which, we're at DAO Fest tonight. That's, was spun out of DAO Stack, an Israeli company. Feld is an incredibly impressive guy. And then obviously Moloch DAO. So can you talk a little bit, how do you think about, those ecosystems and then the LAO?
Sure. So like all great ecosystems, there's multiple different players that have been a part of it. So DAO Stack was an early example and Aragon was an early example. I think the tricky part for those projects, a technical level, a lot of the code that's being used is pretty complex, which makes it concerning from a developer perspective or somebody that's managing any assets, because you're worried that there's going to be some sort of vulnerability, some sort of problem. What was really amazing about Amin Soleimani's work with Moloch DAO was that we we were able to get the same functionality, but with a much slimmed down code base. So we're now at a point, and we've worked with Amin and other folks to begin to release the second version of the Moloch DAO smart contracts. So we're at a point where we have the ERC20 standards effectively for organizations. So if you're thinking about launching an organization...
Just to back up for a moment, so can you just quickly, so there's V1 and then V2, can you talk about kind of what the differences are?
Sure. So V1 was pretty cool. You were able to pool funds and grant a third party some allocation of those funds. So it was great for grant giving purposes. What we've done is we've extended the Moloch DAO initial smart contracts to be able to not only provide grants, but also to collect assets from another party. So one party can transfer in assets into the DAO, and the other party can, and the DAO itself can transfer assets. And they can do that with group decision making. So all the core pieces of an organization, being able to collect assets, being able to vote and decide where those assets are allocated, and receiving back in to the DAO some other form of asset are there. And if you think about what really funds not only New York, but the globe, it's not trading, it's actually organizations, right? It's the ability for people to get together to do something productively, whether that's socially minded or for profit, and that's what that pushes everything. So that's kind of at the point that we are now, and we spent a lot of time thinking about the Moloch V2 smart contracts and the potential use cases. We obviously have one with the LAO, which is really like a venture fund type of a model, but the same core pieces can be used in a multitude of different ways. That's why we like to think of it as like the ERC20 for DAOs, for organizations, which is pretty exciting.
And so are there metrics in terms of, you know, that you're looking at, here's what we're solving for, here's what success will be for the LAO?
Yeah, so there's a couple. The LAO is, you can view it as the DAO, but just done in a way that's legally compliant in the US. So one of the things that we're really thinking about is how much assets under management can we have. So there's certain limitations in terms of the size of which a DAO can be in the US, but otherwise there's not really much in terms of legal blockers. So we're hoping that by the end of this year, that through our efforts, through some of the other efforts in Aragon, DAOstack, and also the Meta Cartel community, that there'll be well over $100 million under assets in DAOs. And I think that that's pretty exciting. And I think that's completely achievable on top of it. So what are these DAOs going to be used for? We think that they're going to be used to enable people to basically make investments in a generic way. That's what the LAO is trying to do. But we also think that this is a path forward for projects that want to raise capital and to do so in a way that's going to comply with US law. So if I'm a group of software developers and I want to begin to build a decentralized open source token-based protocol, well, I probably shouldn't handle all those functions, right? I probably should do what I do best, which is do software development and have a separate entity that pools capital that's able to deploy that, that's able to build a community, that's able to begin to make those types of investments that are necessary. And by doing that, you begin to segregate out some of the functions of these ecosystems in a way that I think the US is looking at things. They want to see and are happy to call tokens that are sufficiently decentralized commodities. Well, how do you do that? Well, don't start one single entity that does it all, right? Why don't you start a whole bunch of different entities that are performing the functions of an ecosystem? And on top of that, and I know, Lou, you care a lot about community, well, when you have a mechanism that can not only fund software development, but also other things that may be necessary to build a successful blockchain-based project, well, you know, we think that that's a recipe for success. So I think once you see us launch the LAO and close that, I think you're going to start to see other projects that are going to begin to use this mechanism to continue to raise capital.
You know, how much time are you spending, you know, with the regulators, helping them understand what it is that you're doing, and you know, and how much is it, you know, hey, if you have to ask for permission, the answer is no.
So that's the beautiful thing in which the way we structured it. You don't need to ask for permission. We actually just are complying with the laws. But you know, outside of helping to build OpenLaw and helping to bring together the LAO, I'm a professor at a law school. I've spent a lot of times working with regulators both here and in the U.S., thinking through a lot of these issues. My opinion, I think that what we're doing here, it really aligns with the direction in which the U.S. is going. And I think this is a path forward for projects or other or other folks that are interested in the crypto space to begin to think about how to pool capital.
Interestingly, tonight at Crypto Mondays San Francisco, Hester Pierce is yapping. So obviously, regulators are important. How much of what you're doing is just focused on the United States, in which case, there's a certain set of regulations, and then there's the rest of the world?
So look, I've always taken a global perspective. I'm a New Yorker. I know how important the rest of the world is. Fortunately, in the U.S., we have the laws in place already to do this type of work. So there's lots of flexible laws that enable us to set up entities that have no single manager, no single operator, that can be democratically managed in some sort of way, which is not surprising. Think about the U.S., very decentralized, very democratically oriented. Other jurisdictions are just not there. Many jurisdictions, most of the EU, most of Asia, they require that an entity has a manager, somebody that's in charge of it. In the US, we're like, we don't give a shit about the managers. We don't need a manager. All we care about is whether or not folks have agreed through private contracts as to the way that this should be ordered. So we have a lot of flexibility in the US, and I think that actually means that a lot of the DAO activity will happen in the US. Doesn't mean that investments can't happen in other places, but I do think that this is really the US is a lead, and probably where a lot of this activity is going to continue to develop.
I got to tell you, thanks a lot for that. I was really not aware of that, but that is super interesting. Of all of the DAO things that you see going on, are there one or two or any specific DAOs that you go, wow, that's going to be a thing?
So obviously the LAO, that's obviously something that we're the most interested in. But I think what you're going to start to see is these hybrid protocol-based DAOs that fund not only grants to projects that may need it, but also investments into core companies. So giving grants is fantastic. It's great to give out gifts, but it provides a pretty weak lever and incentive for folks. There's nothing better than a profit-based incentive. And I think that that's what we're going to see for major protocols, not just having some sort of grant-giving program, but actually an entity that can deploy capital in an efficient way. I also think lots of the DAOs that are thinking about NFTs or some sort of dynamic pricing, like Saint Fame, are really interesting. So being able to not just pool capital in some sort of way, but try to obtain a dynamic price in some sort of algorithmic way is pretty interesting. And then I think all the OG DAOs are amazing. So I still think that Bitcoin and Ethereum are in many ways a DAO. And I think Maker and some of the other strong DeFi projects are pretty strongly in the DAO camp. I think what you're going to see is some of the more mature platforms begin to move in this direction, right? They're going to begin to open themselves up so that they are not there's not one party necessarily in charge, and they can begin to kind of pull themselves out of the ecosystem, so that if the initial software team was no longer available to do software development, or God forbid something awful happened to them, the entire ecosystem would still persist in some sort of way. So the mean time to chaos, to use a famous phrase from somebody on the OpenLaw team, would be potentially infinite.
Okay, so this is going to be my last question, and then I'm going to open it up to the audience. So, you've been here for a while. What's the thing that's going on now that you would most be surprised at if you knew it then? Like, what's been the most mind-blowing thing?
So, I think the most mind-blowing thing is kind of this fusion between DeFi and DAOs. And I think that that's going to be the most mind-blowing part. I think we're starting to see the glimmer of what I like to call in my mind, like blockchain 2.0 applications. So things that we just couldn't fathom before. So the ability to build synthetic assets through lots of the DeFi protocols, and then the ability to pool them together in different ways, I think is really going to be what we look back in 10 years and say, oh, it's so obvious today that we would have this XYZ service, but not something that we could have prophesized or really thought about off the bat. Look, DAOs as a concept off the bat, not that incredible, right? We've had organizations since the beginning of time, pulling together capital, having it run algorithmically. Lots of folks have thought about that even before the blockchain ecosystem. But pulling that in different ways with different synthetic assets is really interesting. And I think that that's where things are going to be going over the next 5, 10, 15 years.
Okay, terrific. Anybody in the audience got a question? Come here and take the microphone. because again, we're videoing this.
Hey, thanks for the time. My name is Andy Martinez. Just wondering, who do you expect to be funding the LAO? Is this within the community to begin with, and then maybe the more traditional world, or how do you guys think about where the capital is going to come from? 100 million is a lot of money for people who have never dealt with blockchain before.
Okay.
So the LAO is not going to be $100 million just off the bat. We're starting small. We want to make sure that we prove this proof of concept. But to answer your question, we think that this should be a community-driven enterprise. Really what distinguishes Ethereum and many of the other great blockchain projects is that they've got a tremendous community. I think what we've seen in the Ethereum ecosystem is that the venture capital community is beginning to suck away some of the profits that otherwise should go to early folks within the Ethereum ecosystem. And really, the reason in part that I got into blockchain technology off the bat was that the financial system, which includes Silicon Valley, it's broken. It's broken that if you want to start a company in the US, you have to move to California or New York. It's broken that if you're an entrepreneur in Israel, that you're not able to raise capital, that you basically have to sell your company in order to continue to grow. That's a broken system. It's broken that if you're in the Ukraine or you're in other parts of the world, you can't actually gain access to any capital. We're not fulfilling the level of innovation that we're capable of doing, and we want to begin to push on that. So the step one, it's going to have to be community driven, but I think in the longer run, one way to think about what we're trying to do is really stream money. And stream money in a way that works for everybody. So like Coinbase started by listing Bitcoin, and then eventually has created an entire ecosystem of assets that are bought, sold, and trade. What we're hoping to do with OpenLaw and with the DAO, or the LAO, is to begin to rebuild that up. So do it in a very conservative way off the bat, but over the next 5, 10, 15 years, push towards this vision of having completely streaming money. So capital pooling into funds, being allocated efficiently, regardless of where you are, regardless of your background. So that's where we're moving.
Okay. Anybody? Going once? Huh? Anybody? Twice? Okay, here we go. Hold on just a moment.
Quick one. So if I've got an early stage, very early stage startup, how would I start to engage with LAO?
So it's pretty easy. You can go to the lao.io/verify, /apply. And you could begin to submit information. So it's entirely member managed. I have no role in making those decisions, except to the extent that I'm going to be a member. But that's how you can begin to try to raise capital for your project. The members will vote on that. If you're interested in becoming a member of the LAO, you can also go to the lao.io/verify and begin to verify yourself so that you can become a member. We're going to have a public call for capital in the next couple weeks, where you're going to be able to pledge capital to the DAO, to the LAO, and receive back tokens which represent your ownership interest and pro rata right to profits in the LAO enterprise. So we think that's going to be for projects, but it's all member directed. So we could see DAOs being used to provide liquidity. We can see DAOs that are going to be used to handle a whole bunch of for-profit enterprises. Just like anything else, the world is completely open here.
Any minimum investment?
So we are setting a minimum Yeah.
Repeat the question.
Is there any minimum investment? So the minimum contribution is likely going to be around 100 Ether. So we're going to set it as it gets a little bit closer. The Moloch V2 smart contracts require effectively a digital asset that's going to be used. We think Ether is the right digital asset to use, and we're going to set a minimum amount that's necessary. Under US law, you're permitted to buy up to 9% of an entity. So you can basically purchase up to 9% of the LAO, i.e. provide a contribution that would equal 9% of its total contribution.
And why the 100 ETH? I mean, interesting, right? I think the Moloch DAO had the 100 ETH minimum, and I think that's why now there's a meta cartel, because it turns out a lot more people don't have 100 ETH.
So we're New York. You have to put a little bit of a velvet rope up. So we think that this is important to make sure that we're getting folks that have been pretty deep into the crypto ecosystem. And this is the first LAO that we're setting up. So over time, we've basically built a system where we can just factory these out. So if there's other folks that are interested in forming a DAO or forming another LAO, we'll be able to spin that up over time. And we imagine a future that's not one entity, but an entire ecosystem that's all running effectively on the same operating system, which is Ethereum, and some of the tools that we built at OpenLaw that enable us to begin to coordinate lots of this activity in a very decentralized and non-centrally coordinated type of way. So let's say there's an ecosystem of 10 DAOs. One DAO funds one project, the other 9 could be notified of that, right? And then they can make an independent decision related to it. So imagine if Silicon Valley had the same operating system. Well, heck, we have that. It's called Ethereum. We can begin to coordinate all this activity and begin to the same common backbone to start doing that.
Okay, terrific. We got time. Okay, here we go.
Hey, what's up, man? I'm Randy. I have a question for you. I help manage, I got a team that we have a coin, Global Boost. And we have a couple exchanges that we're on. And there's an organization that's putting our coins together with a bunch of other coins, like OG coins that have been around for like many years. I was wondering, can we put our coin, or are you going to accept like people who have coins or part of, like other blockchains into your DAO?
So off the bat, the first LAO will be denominated in Ether, but there is no real limitation on the Moloch V2 smart contracts. It needs to be ERC20 compatible. So to the extent that any token can be rendered ERC20 compatible, you can basically spin up a DAO. So I wouldn't be surprised if in a year we start to see Bitcoin DAOs. There should be development on the Bitcoin ecosystem. I wouldn't be surprised if we see DAOs for other communities like Chainlink or Maker or ETC or Ethereum. Ethereum is the bridge to all these different ecosystems. So as long as you can build some sort of bridge to Ethereum, then you should be pretty much good to go.
Okay, I'm going to take the last question because we're coming up on the half hour, and we always say that the biggest value of Crypto Mondays is the networking rather than the content. No offense, but okay, when you created the LAO and you look back, and I think like part of the difficulty, right, of talking to most people who don't come here is giving them context, that they can relate to. So when you were creating the LAO, what was it that you drew inspiration from that other people could actually relate to?
Sure. Really what inspired us was just the ability for people to pool capital and to invest in things. There's nothing more important to the commercial world. So with Ethereum, we built a way to create an effectively digital assets. That could be something that's like a stablecoin, like money. That could be an interest in an open source blockchain-based protocol, like a utility token. That could be a token that represents some sort of security or some sort of interest that can generate a profit. It can be a whole host of these crazy synthetic assets that we know nothing about. We don't know exactly what they are, but we haven't yet had the ability to bring that power together and begin to allocate that in a productive way. If you think about what runs cities like New York, it's not the trading volume necessarily. It's all the entities and organizations that are formed that really bring together humanity. And if Ethereum is going to be this global, commercial, and social layer, then we need to bring people together. So it's really that inspiration. And thinking about new ways that we can build better entities that are better functioning, that are able to help people, and also hopefully help people enrich themselves in some sort of way, that's really motivating.
Okay, let's give Aaron a big hand. Thanks a lot. That was awesome.